Okay, so this is pretty much how the market works. So the market works based off of two things, and it's going to be based upon how the market structure works. So if you go to any single chart that you go ahead and see, a lot of the times, if you go to the first piece of price action at all times, as you can see Apple here in 1981, or if you go to Bitcoin or whatever, a lot of the times you're going to see companies start at zero, correct? So if companies start at zero, then we can go ahead and comprehend that, okay, companies start at zero. So this means that resistance pretty much comes before support. So let's talk about what resistance is. So this is how the market works. So the market is going to work in a staircase format. So the market's a lot easier than you might think here. I'm going to show you many examples as we keep going. But market works in a staircase format. So if price starts where at zero, when things were to pretty much open up, as you can go ahead and see, price a couple months later went ahead and did a big rally, correct? So, whoever decided to, Jeff Bezos, put the Amazon company on the stock market, it just opened. So pretty much here's at zero. So this is before any type of market structure. So this is how market works from the first trades of all time, and this is how it still works now. So boom, Amazon opened here in 1998. So after we've gone ahead and seen this, we can go ahead and be like, okay, price decided to come up and do this big rally here. So when you see candlesticks tricking upwards in a direction, especially when you see green candlesticks, so whenever you see price going in a upward direction, that means people are buying. So whenever you see people buying in an upward direction and you see your candlesticks green or whatever color you decide to change it to, that's bullish. But if you just keep it on green or red, and if you see candlesticks going in an upward direction, that means people are buying. Now, eventually, that buying is going to slow down. So people aren't going to just buy forever. Otherwise, the market would work in a straight line and go up in a straight line, up and down. And it would be way too easy. But it doesn't work like that. So, after there's a heavy amount of buying, people close at areas called resistance. And resistance is going to be an area where price decides to fall down and where people are going to sell. And the reason why this is important is because options and futures trading, those are just aggressive forms of trading where you can make money extremely fast because it's more leveraged. But there are plenty of old people, plenty of casual people who just invest in the S&P 500 and things like that and just get slow returns over the years. So as we can go ahead and analyze here, if you go from the start to any company, this NVIDIA in 1999, this is the early beginning of Walmart, 1972. You see all these here? So we see how price is pretty much at zero once all of these open. So let's just know that resistance has to come before support. So let's go ahead and let's keep analyzing here. Okay, so see price going in an upward direction. People have some buying stepping in as soon as Amazon came in for a couple of years. After this, though, we're going to notice these two things up here. So as you can see, Amazon decided to go ahead and rally upward. and then it decided to stop at these two kind of points right here. And you see how these 2 points are pretty much in the same exact place? So whenever you see areas in the same exact place, and these little edges of the candlesticks, so each one of these things are called candlesticks as well. So each one of these here is called a candlestick. So each one of the little bars that you see, they're going to be called a candlestick, and they represent the price action that happened depending on the time frame you're looking at. So if I'm on my monthly time frame here, each one of these candles will represent 1 month worth of price action. So it's going to show me everything that price did within the month range. If I'm on my weekly, then each one of the candlesticks will show me each week worth of price action. So as you can see, April 20th, and then the 13th, 27th, the 4th, the 11th, and you're going to see the dates all the way at the very bottom there. So now, if I click my weekly time frame, and you're going to change your trading view time frame all the way at the very top. So, depending on the time frame that you're using, is going to represent what you're going to see on your screen. So, if you're on your daily time frame, then each one of these candlesticks will represent 1 day. If you're on your 4-hour time frame, each one of these candlesticks will represent 4 hours. 1 hour, each one of these represent 1 hour. 15 minute, each one of these represent 15 minutes, etc. You know, and then the 1 minute, yeah. And that's going to be extremely important because we're going to easily be able to analyze key areas of support and resistance. We're able to analyze key areas of support and resistance by looking at wicks on the higher time frames. So the higher time frames are going to be in the time frames that you're going to use to find your entry. So the time frames that will be used to draw your zones of support and resistance, use the monthly time frame, weekly, and the lowest will be the daily. And this is going to be fully recorded and uploaded as well too, immediately afterward. And the lowest will be the daily time frame. Okay? So, the only time frames that we're going to use to mark out our setups are going to be the monthly time frame. And in order to add time frames, you're going to go to Trading View at the very top, click the little left arrow, or to the right, and then you'll go ahead and click stars on the 1 minute, the 5 minute, 15, 1 hour, 4 hour, 1 day, 1 week, and 1 month. And remember, in order to find our setups and our entries, a lot of the times we're just going to be having to use the 1 month, 1 week, 1 day. And the reason why we're using higher time frame, the reason to use higher time frames over smaller ones to mark setups is because everything that you see happening currently on the chart is based upon past reactions. So, if you're on the 1 minute time frame, right, and I go all the way up here, this is only showing me, this is pretty much only showing me a day. All of this one page right here is Friday. So this is Friday, and then Monday is over here. So this is pretty much barely showing me not even the full 2 days on one page. And remember how I said price action happens on stuff that's happened all the way over there, correct? So if you're on the 1 minute, you can't keep going all the way over here to try and determine what setup. You don't even have enough bars on TradingView a lot of the time. So we easily just make it simple, use our monthly, weekly, and daily time frame, and then we're going to be able to go ahead and easily find everything. Because now you see how you could see every piece of price action? Boom. Now you can literally see everything. And as we keep going, I'm going to show you how we're going to very easily find setups. So let's talk about what to look for on these higher time frames. Okay. So, awesome. So whenever you see price going upward in a direction, that means people are buying. We know that each one of the green, red things on this chart are going to be called candlesticks. And now, the most important thing that we're going to go ahead and realize. So each one of these candlesticks also have one more component to them. So I want you to pay attention to them. No matter what time frame that you're on, whether the 5 minute or the monthly, each one of the candlesticks are going to look the same, but they hold different pieces of information. So we're going to see here. So you see at the tops here of these red candlesticks, the very tips of them, the very top tips of the red of any candlestick really. So here's the top of this one. Here's the top of this one. I want you to just pay attention to the tops of the candlesticks. Do you happen to see these here? Okay. The tops of the candlesticks have a names. And first, the tops and the bottom of the candlesticks, they have a global name. And these are called, and they start with a W. So on the candlestick, whenever you see the top and the bottom, those thin lines on the candlesticks, these are going to be called wicks. The thin lines on the top and bottom of every candlestick are called wicks. And this is going to be the most important thing in trading because this is how the market reacts. So there's going to be top wicks and bottom wicks. So a lot of the times, so as you can see here, you see how price decided to run up here to this wick right here. And you see how price did the thin line. So whenever you see the thin line stepping in, that means opposite orders are coming in. So remember, if you see it going upward, right, and you see a bunch of green candlesticks, so you see how it's, let me do this here. So you see how right here it's thick green filled in. That means that there's a lot of people buying. That means that there's not a lot of selling coming in. Now, when you start seeing the line go thin, that means that there's selling coming in. Now, same thing here for a red candlestick, right? You see how this one's thick red and it's going down? And then you see how down here it does the thin line? That means that there's buying stepping in. Because people bought here. And it was like, all right, bet, I'm not going to keep dumping. I'm going to go up real quick, come up to here, and then go back down. All right? So, that's what that means. And you're going to notice that the market does the same thing pretty much over and over again. It's just about analyzing the right things. So, the very tops of the wicks on the higher time frames, the top of the wicks on the monthly, weekly, and the daily are called resistance wicks. So these are called resistance wicks because resistance indicates an area where people are selling. So even though the goal is for it to go up, it's not going to just go up forever because it's called trading for a reason. When you're trading, somebody's winning money when you're losing, but when you're winning, somebody's losing. So it's called trading for a reason. So it's just about getting the answers right on the quiz every single day. And a lot of the time the answers would be there for you. It's just about analyzing it. So the top of the wicks these are going to indicate areas of resistance, because at the tops of the wicks, that shows that people were to go ahead and sell because price headed downward. So as you can see, once price does the top wicks, you see how price decides to fall down. Top wick down, top wick down. Anytime you see price make a top wick and fall down, that indicates an area of resistance because people are selling. Indicates people are selling at this place. And we just easily use the cheat code of just using our higher time frames to block out all the noise and find the profitable setups, because it reacts off the higher time frame setups. I'm going to show you so many cool examples. So, cool. So we know that the top wicks are called resistance wicks because this indicates that people are selling at this place. So we're going to have these bottom wicks as well. So market's not just about going, or it's not just about selling. People are going to be buying at different places as well too. So when you see the bottom wicks and then you see price push upward, that's going to indicate an area of support. The bottom wicks indicate buying. If you see the candle go upward, this can indicate an area of support, an area where people buy. So the market can only go two ways, up or down. People can only do two things, buy or sell. So let's just make it super duper easy. It's a lot more simple than you may think, especially on options and stocks. So cool, let's check it out. So now that we know that the top wicks are going to be called resistance and the bottom wicks indicate areas of support on the higher time frames, we can go ahead and put our market conclusion back into place. So if market starts at 0, right, and then does a random push up, so let's say market were to come down, say we're to go ahead and do this, right? Boom. So price started here. So price started right here, correct? Boom. Price decided to push up, you know, people, some buying, stepping in. Boom. Let's just say I just opened a company, or you just opened a company, you know, Imani Co. Boom. Just dropped. So boom, people are buying, and then boom, market's going to top out, and eventually people are going to start selling, right? So this is how it's going to work. So once you see people start selling, that's going to go ahead and indicate, once you start seeing wicks on your monthly, weekly, or daily, your hard time frames, you start seeing some heavy selling after a strong amount of buying, that can indicate an area of resistance. So let's say price were to go ahead and come down, boom, 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 and let's say price were to go ahead and just stop right here, correct? So this is going to go ahead and indicate an area of support, because you can go ahead and see that price decided to bounce upward from here. So support is going to indicate areas where price bounces upward. Resistance indicates where price bounces downward, because people are selling, and support, people are buying. So boom, let's say people bought here, and let's say price were to go ahead and come back up, correct? Let's say price were to stop in the same area again. Boom. Once again, this is also resistance here, because you see how price didn't break above this line and it sold again here, correct? Cool. So price was like, all right, bet. Let me go ahead and go down and collect ammo. So the market, okay. So the goal of any market, I don't care if it's crypto, stocks, whatever, is to keep going to new all-time highs. The market goes down to collect ammo from the losers, people who don't know what they're doing, and they have a name for them. They're called liquidity, and we don't want to be liquidity ever. So market only goes down just to come back up. So remember, you would be a profitable trader if you just buy and hold Eventually, you'll probably win. But there's systematic ways to just avoid things and easily just farm the manipulated market. So we just take advantage of that. But people who buy and hold are very, very profitable because the goal of the market is for it to go upward. All we're doing is just aggressive forms of trading, is all. Those people can only buy, but on options and futures, you can actually make money when price is going down too. So, cool. So let's say price decides to go ahead and reject at this same area again, right? So boom, it created an area of resistance here, fell down. Literally did the same thing again. Market is this simple. It will set up for you this easily here. I'm just going to show you just a quick example. Actually, I'm going to finish this one here, and then I'll just show you a quick example. But boom, price will bounce downward here from this line twice. Okay? Eventually, price is going to try and come above this line. Once price finally breaks above or below an area of resistance or support, and key areas of resistance or support where you see price action doing the same thing over and over again, those are going to be called key levels or zones. But price isn't going to keep falling because the goal of it is for it to go up, right? So price isn't going to keep falling from the same area over and over again. Remember, it only goes down to collect ammo. So after enough ammo is collected, it has enough pellets in the shotgun, and it's like, boom, blast through the wall. And then as you can see here, it's like, all right, I'm done rejecting here. I'm going to finally turn up, and I'm going to make something happen, and I'm going to break through and propel forward. And that's exactly what price decides to do. It's like, I'm not going to stop here, and you're not going to stop me anymore. Because price has enough ammo and enough experience from failing here twice. And then price decides to break through. So when price decides to not bounce at an area and shoots through it, that is called a breakout. So yeah, so there's gonna be so that's gonna go ahead and be a breakout. So cool. After we've gone ahead and analyzed that, let's go and let's get into the best part of the market. So if price were to go ahead and start here, let's say Monte Carlo just opened up, boom, hit some resistance, a bunch of people were to go ahead and buy. Went down to zero, same thing again. Went up, hit resistance, fell back down. Say eventually decided to break through this key area of resistance that it kept falling at one day. Could take a while, but it eventually happened. After that, price is going to go ahead and break above this area of resistance here. And this is the only way market can work. Market is extremely, extremely simple once you do understand this. Gotcha. Gotcha. Yep, so check this. So you actually don't buy at support because market can't work that way. If market were to keep coming back down to here, it would pretty much be sideways and everyone in the world would be rich. But what a lot of people fail to realize in trading is that when price is going up, wait for it to go down and buy it back up. But a lot of people don't know that the way the staircase can work, market's a staircase. Market does not buy at supports. Market actually buys at resistances. So resistance turns into support. And then market decides to go ahead and continue upward like that. So this is the only way this staircase could work, correct? This is the only way, the logical way the market could work. If price kept coming to support here, it would be zigzag. And it would be way too easy and everyone would be in Lamborghinis. But price, what people fail to realize is that price actually bounces upward off of resistances. That's how the staircase can work. Remember I told you price starts at zero, right? So price started at zero right here. Came up, made this area of resistance, correct? How do we know this? Because we see two very strong wicks and then price heading downward from this area. And price came in contact with pretty much the same place and did the same thing. So if you see price come in contact with the same place and in this instance sell, then this is going to be an area of resistance. So after I've gone ahead, oh, go ahead. Gotcha. So actually what I like to go ahead and do, so this is what I do here. So step one, well, I'll break it down as we keep going, but this is what I'm looking for here. So this is just the first trade example ever. So after price were to go ahead and make this super high, if I see price coming into this area up here first and then rejecting, and then I see price coming into this area again and then rejecting, I'm going to go ahead and just draw a green box from the top of this wick to like, you could do like the bottom of these, but those are going to be like depending on your stop losses. But I'm expecting price to bounce at one of these key areas of resistance. And it's just about waiting for the right reaction. So let's go ahead and let's check to our right, and let's see if price decided to bounce anywhere off of this resistance wick, or this one. Let's just see. Even here too as well. I want you to pay attention to this. You see this resistance wick right here? I want you to pay attention to this one over here. So we see how price decided to come in the green box and then short. Eventually, price decided to break above the green box. So you see how over here, price kept shorting from over here, correct? Where? Over here? Over here? Gotcha. So right here, this would be a short trade. So short trades, and we're going to keep going through this as we keep going. But short trades indicate what's going to be called puts. So short trades are going to be wanting price to go downward. And then there's going to be a long trade, and those are going to be calls, and you're going to be wanting price to go upward. So we can go ahead and see over here in this green box, price came up, started here, and before it did a big pull down, and then came up, did a resistance wick here, did a resistance wick here. I like to draw a big zone on the best resistance wicks near each other, because a lot of times you're not going to know which exact one, but you're going to know the zones of the exact one. Like you can have a good idea of the zone. So I can see at this green box here, price decided to come in between the green box and do a lot of heavy selling. Price did the same thing over here, a lot of heavy selling. But this can't keep happening, because Amazon has to go up one day. So, boom. So as you can go ahead and see, price over here decides to not short at this area. So as you can see at the top of this line over here, at the top of the yellow line, price decided to keep shorting, right? Over here to the left. But then as we can go and see over here at this yellow line, price got above the yellow line, correct? Okay. So, as we just saw in the drawing, once price decides to not hold areas of support or resistance, that is called a breakout. So once you see price not holding this area of resistance over here, we can go ahead and see that this is a breakout over here. So price decided to finally push above this resistance wick. It said, I'm tired of it. I'm not going to keep selling here anymore. We have to make some progress. So we can see here that in this green box here, there's lots of selling going on. After price were to get above this green box, price went ahead and did something here. Price broke above this yellow line, correct? And we go ahead and see something here. Price decided to break above the yellow line, come back down into the green box, and then go back upward, right? So, and we know that market decides to bounce off of areas of resistance. So all I did was draw a box, just using my monthly here. You can use your monthly, weekly, and the daily, and just identify the best, cleanest resistance wicks, and we're going to follow price action. So all I did was identify that lots of selling were going in and happening here, drew a box around that, waited for price to get above that area. Once price got above that area, and remember when I told you, if price is going up, wait for it to come back down, and just buy it back up. And if price is going down, wait for it to go up, and buy it back down. And that's how you trade with the trend. So if I see price here just trickling upward, boom, and we broke out of the resistance area. Once you break out of areas of resistance, that means that there's lots of buying. Because remember, resistance areas indicates lots of selling. So if we don't sell at the area of resistance anymore, people are buying through that. So boom, after it gets brought through that, boom, price wins ahead and comes back down into the area of resistance. And remember, in order for the staircase to work, price has to bounce at resistance. Can't keep bouncing at support, otherwise market would be sideways. So market decided to hold this area, this zone of resistance, and bounce upward from there. Yep, in this zone. So I would do something like this. So I would see, so after here, if I saw resistance wick here, resistance wick here, resistance wick here, and I see price action reacting off of 1, 2, 3, because I see this one here too. So I know this is like the lowest one here. So I would easily be able to do something like this. Stop loss under here, because I'm expecting price to bounce at this resistance wick is my last hope. This one right here. Because I see price rejected heavy from here, rejected heavy from here, rejected heavy from here. And I'm expecting price to bounce at resistances. So I like to just draw a zone at each of them because I know price is going to try and hold them. And if it doesn't, then it's going to try for different ones lower. But I know these are the best resistances because I see price dumping from here really heavily over the same months, over months doing the same things. So I'm like, okay, cool. Let me try this out. And as you can see, price went in, held the area of resistance, and continue upward. And it's just about finding the right areas of resistance over and over again. It gets a lot easier, especially with current price. Like as you can see, just check this out. This is a really just simple example. See these two areas of resistance right here? You have this wick right here, and then we have this wick right here, correct? If I draw a zone on these two, guess what you see over here? Buying, correct? So this lets me know that how the market works, and I showed you from the first trade of all time, and this is now 2012, and this is just how the market works. So resistance turns into support. Market is really, really easy. All you have to do is use your monthly, weekly, and daily, especially on options, and just take your time, see if market holds these areas, and buy upward. And I'm going to show you how to short as well too as we keep going. But this is how market works. Shorting is a little bit more. You just have to pay attention to it a bit more. But buying, this is how buying works. It's just very simple. So market's just going to make an area of resistance, fall down from there, eventually break through that area of resistance, right? After price breaks through that area of resistance, eventually one day it's going to come back down. It did it on this candle right here too. But eventually price is going to come back down, try and hold the area of resistances, and continue bullish from there. Right? So even here, right here, if I draw a line at this resistance wick right here, guess what you see? Resistance turns into support, correct? Boom. So that's it. Market literally just works like this. Market literally just works like this. Just makes areas of resistance, falls down, breaks through that area of resistance, comes down to that area of resistance, turns that area of resistance to support, and tries to bounce upward. And a lot of times what it'll do, it can come in contact with an area of resistance again, fall down, and then try again for a breakout later. But as you can see, all market does is look for areas of resistance and bounce at them. So as you see how price made the area of resistance here first, correct? And then guess what? Price did the same thing twice at the yellow line. So this let me know that, okay, if price does the same thing twice here, this probably indicates a strong area of resistance. And price would have held it and bounced at that area of resistance. And we never came back down here again. This happened in 2015. All right. So market bounces upward off of resistance. And this is how price works even to this day. And it's just about finding the right resistance wick on your monthly, weekly, and daily time frames. Those are going to be the easiest ways to find them. So as you can see here, sometimes you can find them just using the monthly. Sometimes you got to go to your weekly, and sometimes you got to scale down as small as the daily. But the daily on the lowest time frame will tell you the answer. None, 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 none. Those are all late. All indicators are late. Because either it bounces at these or it doesn't. Like, that's it. That's it. Yeah. Yeah, there's no indicate. Oh, okay. I'll tell you one, though. There's going to be one. Great question, actually. This is going to be one called the tape. This right here. This is a very, very helpful tool. So, gotcha. So let me go ahead and instruct you here. So let's just say here, right? So you see how it's bright red? So this indicates that there's a lot of selling coming in. So let's say I was trading here, right? Let's say you see how price came in contact with the yellow line, fell down, kind of came in contact with it again, and then fell down. So remember, resistance wicks indicate selling or buying. No, resistance wicks. Well, okay, I see what you mean. Yeah, yes, but when you first see resistance, because remember, resistance turned into support. But when you first see resistance, what does it indicate? Selling, exactly. So, and remember, you're gonna see red and it's going down. So if you see red, it going down, and you see red here on what's called your tape, and you see it spamming red, that means there's straight selling coming in. And you want to be a sheep in the market. You want to be trading with the trend. So if you see market coming into an area of resistance, you see a bunch of red, you probably shouldn't be buying, because it's gonna short there. Now, let's say right here. Yep, exactly. Nice job. We even get into that, but yeah, you would go ahead and you would put a put. So, knowing that, let's say price were to go ahead and break above this area of resistance, come back down to it, right? Remember, we're looking for price to bounce at areas of resistance after it breaks above it, and that's going to be called break and retest. So after price breaks an area of resistance and tries to bounce on it, that's called break and retest. So break and retest is after price breaks an area of resistance and tries to hold it to continue the trend. So there's going to be two different instances of this. So if market's just going upward, this is the easy one. Market's going upward, we're looking for market to try to bounce at areas of resistance, correct? Now, if market is going downward, we're going to look for market to short at certain areas of resistance. So I want you to see something here. Each of these lines are the same thing. It just depends. There we go. I want you to study this picture if that's okay. All right, this is how market works. Just like this. So let's say price started here, right? Boom, came up, made an area of resistance, fell down, correct? Boom, came down, made an area of support. After that, market decides to come back up. Remember, when we break through areas of resistances or support, that's going to be called a breakout. Yep. So breakout. So whenever you see resistance here. people are buying, and support gets created from when price breaks above resistances and turns it into support. That's how supports are created. Resistances are just areas where people are selling, but support gets created off of resistance. Okay, so to say price went ahead and started right here, went ahead and made this area of resistance, fell down, made this area of support, and then price went ahead and broke above this area of resistance right here. So that is going to be called a breakout. Once price were to go ahead and break out of this area of resistance, it's going to go ahead and retest this area of resistance, and the previous area of resistance is now support. So that's because strong resistance turns into support. That's the only way market can bounce upward. Market's much easier than people think. It's much more predictable than people think. It's just, you just have to be full crackhead to come to these conclusions. But once you do, it's really easy. You can win pretty much every single day. But cool. Now we've analyzed that support is based off of old resistances, the breakthrough of those. So we can go ahead and read here, and we know that resistances are where areas where people sell. So resistances. So if you were to short, so your long trades, right? So longs are easy. All you're literally doing is looking for price to hold an area of resistance. It's either it does it or it's either happens or not. That's simply just it. It's either it happens or it just doesn't. Now when you're shorting, you're looking for price to, you do have to be a little bit more analytical just because there's more price action. But shorting is easy too, because just like price has to go down to come up, price has to come up to go down. So if you see an area of resistance meeting up with the same places with each other, kind of like these two, then you'll be able to go ahead and take a short down. Take it down to the next, because remember, you're looking for price to bounce upward, right? So if price is going down, it's going to try and hunt for an area of resistance to bounce upward at. So then that's how you know when to get out. So if market's going down, it's going to go down to try and bounce upward, right? So if it's going down from areas of resistance, all you have to do is look for an area of resistance, below it, be like, where would market try and bounce at? And just set that as your take profit. And that's it. You could literally play any way you want in the market. But a lot of times, especially on options, it helps to trade with the trend because you can easily trade your life. Because on options, what's so beneficial, like I've plenty of times easily turned a couple hundreds to thousands of dollars in contracts within like a few days. Because on options, what's so stupid about it and what's so nice is you get rewarded when you win. So on futures and forex, you make the same amount. But on options, say your win starts going crazy, right? Like you start getting paid more. Like that's just how it works. Because on options, you get paid based off predictions. So if you're right, it's like, yeah, definitely pay him or her. They're a good trader. So options is a very good way to supplement your income and change your life. I just dropped the video the other day, made a quick little $100 in 15 minutes, just quick little trade. Based, and those contracts only cost me $80 worth of risk. So from an $80 account, that turned to $180. Say I were to do that for 3 weeks, right? I could easily have a 3 to 4 figure account. Then instead of $100 wins in 15 minutes, now each one of those wins are $300. And you see how fast things can turn up from then? Then 4 trades, that's all of rent. 4 or 5 trades, that's all of rent. And next thing you know, your work money, you pretty much get to keep. Pay off your car, insurance. Trading, you do not need a big account, and this is why I came out. Because I want people to know that if you are a skilled trader, you do not need a big account. And when you have an extra 100, 200 coming in just 3, 4 times a week, that's supplementing very nicely. And everything else is pretty much obsolete. Groceries and stuff like that. Yeah, I definitely recommend I recommend like a 100 to 150. Yeah, 100 to 150, and each loss you'll take will be around like $20 at first if you were to take a loss, but your win should be at least $100. And we're gonna keep talking about that if you continue to go with the mentorship. But that's how trading works. That's where people go wrong. They don't know how to manage their risk. So if you're risking $20, you should be at least trying to make 100 ball. because that way you could lose 4 trades in a row before you lose all your money. And you're not going to lose 4 trades in a row a lot of the times. That just doesn't happen. And say it does happen. If you win 2 trades, you're still back in profit. So this is just how it works. And a lot of the times, especially on options, it's extremely easy and it's going to give you the answer for you. It's just about finding the right resistance wicks. So we know that after price breaks areas of resistance, resistance turns into support. Okay? So boom. That's going to go ahead and be that. So, yeah. So yeah, that's actually what I was going to show you. I was going to go to current price. So yeah, I just wanted to show you that this is still valid even from the first trade to all time. This is how market works. Market has never changed, ever, ever. It only goes up and down. It's been the same thing for decades. That's why there's so many hidden billionaires and millionaires from this, and people don't even talk about this because they don't understand it to this extent. Yeah, yeah. So check it. So it's a lot easier than you think, especially now. Though those are old price action. There's like nothing there. Trading is a lot more popular now, so the monthly candles just like look like this. So I'm going to show you just a very simple example here. Let me let me make it very easy actually. Let me go to Google. Especially on options, it's going to be stupid. It can actually be these simple this time. This trade already happened, but let me just show you this for example. So price was up here at a point in time, correct? You see this dotted line where you see price to the right? So you see that 168.66? That's current price. That's where it's at right now. But at a point in time, it was up here at this 183.75 area. Let's go ahead and put a line at these areas of resistances right here, correct? So you see how price came in contact with this yellow line and shorted twice? You see how easy the market is? It's this easy. It literally does the same things over and over again. And if you can't find it, like it's completely on you. The answers are there for you every single day. Every single day. It's a welfare system. Trading was created so people are able to get money. The charts are here. All you have to do is click buy or sell. Nothing stops you. There's no nothing. Trading is welfare. That's why Trump just dropped things like Trump coin and stuff like that. They want people to win. But it's just about analyzing these things. There's a reason why you can make salaries in minutes based off of this. Because people don't want to work. And Wall Street people know that as well too. So boom. So let's just see here what happened once price broke below it. So price didn't hold the area here fully. But let's see if it did at a point in time. So remember when we said that price tries to bounce at areas of resistance, right? Guess what? All I literally did was go to my monthly, analyze these two simple areas of resistance right here. And here you could draw a zone on these two. But all I pretty much did was notice these two resistance wicks right here, correct? And remember when I told you price is trying to bounce at resistance wicks, correct? So if I get on my 1 hour, guess what happened once price came in contact with the resistance wick area? Buying, correct? You could have easily made thousands of dollars from hundreds here. Twice. See how it literally did it twice? Twice. It couldn't have been simpler from this. All you have to do is just analyze the right things. Now, that's going to go ahead and be for the long example. So if price is going downward, we're going to be waiting for, in the next session, I'm going to break it down slowly, how we can find entries and stuff like that. But I'm going to show you how the market works, and it's very simple. So, market decides to go ahead and bounce at these areas of resistance, because it still has to go up to go down. It can't just go down. It's going to trickle down in a stair, like this. And if it's going up, it's going to trickle up in a stair, like this. So it's going to work like this. As you can see, you know, remember what I told you. If market's going down, wait till it comes up, right? And take it back down. Wait till it comes up, take it back down. Wait till it comes up, take it back down. Wait till it comes up, take it back down. So you see how my drawing is literally the market, correct? This is today's price. This is just how it works. Same thing if market is in an uptrend. Let me see what's an uptrend. Let's just say this right here. So remember when I told you, if market's going up, wait till it comes back down and buy it back up. Wait till it comes back down and buy it back up. Wait till it comes back down and buy it back up. Wait till it comes back down and buy it back up. Wait till it comes back down and buy it back up. So the market is extremely, extremely simple. And remember, if you're looking for a market to buy, all you're looking for is resistance wicks to hold. And that's it. Just strong areas of resistance, and you're just waiting for those to hold. Okay? So in this instance here, this is just using the 1 hour here, but I just wanted to show you this quickly. I want you to pay attention to this resistance wick zone here. It's a very strong one. So look at this conglomerate of resistance wicks over here, right? You see price falling in this area here, right? I want you to pay attention to this. Support got created off of these areas, correct? And then I want you to see this over here too. This is the 930 wick. So remember when I told you prices a lot of the times they're going to try and set up for you in the morning? Boom. Market opens at 9:30 a.m. Eastern time. So a lot of the times, especially on options, it'll be right there for you near your entry, and you just take your setup. So back to your question, yeah, a lot of the times I like to just find my setup literally like an hour before market, see what's chilling near the level, and just take it. And options is really, really fun because a lot of the times it just sets up for you right at 9:30. Like remember how I told you if market's going up, wait till it goes back down to buy back up, right? So I want you to pay attention to right here. So remember how I told you it has to go back down to go back up, correct? Guess what time this is? Check it out at the bottom. Okay. Guess what happened over here? This is an area of and resistance turned into, and you're a pro. That's it. That's all you're doing. That's all you're doing. That's literally all you're doing. Market is 100 times more simple than people realize. But if I were to educate you, start throwing lines all over the screen, EMAs, ridiculousness, you'd be confused right now. You'd be extremely confused right now, and you wouldn't get it. You wouldn't get it as quickly. I'm gonna be completely honest. All those lines guide you towards the tips of the candles. Those lines are there because people don't know how to find the candles. Yeah, but a lot of the times those lines are inaccurate because if you don't really know what you're looking at, then it's like cheating on a test. You know, one day that person isn't going to be there in class that you're cheating off of, and then you really lost when it's test day. So just might as well just lock in, be self-sufficient as a person, and just understand it when it's a simple thing to understand. It's a staircase. It's literally a staircase. Market just tries to bounce and hold areas of resistance or support, and that's it. You see this right here? No, no. I have a boy, my boy upstairs. I taught him. It's actually why I started teaching. I never wanted to teach publicly because it used to frustrate me teaching. But um, people told me I should just start. But he started literally like two months later. He was on a funded trading futures, but got a payout. Like and literally just full study. And I remember he came to me. He was like, "Yeah, bro, I just see the market goes up and down." And you can be especially when you have a mentor, you can become profitable extremely fast. That's why I commend you for coming for mentorship. You're going to be able to avoid a lot of unnecessary losses and avoid a lot of unnecessary money lost versus when you try to actually get into this. And that's why the people who do get onto the other side of this, like I do have a mentor I really like. His name is Neo Young. Um, yeah, I need to like this is just the person I watch and keep up with. But yeah, this is one of the traders I do look up to. He does six-figure days and stuff like that now, but he comes from 500K debt. 500K debt, and then he had to go back to trading. He didn't get in debt from trading. He ran it up in trading, tried to start a business, lost it all in the business, had to go back to trading from square one, started from small accounts. So I'm going to show you that even I have live logins on my own personal channel showing you guys small account profits. And, he did like $500 to or $400 to like 40K and pretty fast. And especially on options is really leveraged like that too. Think of it like this. You start doing like 100 even $100, $150 wins, right? Boom. There's 20 trading days in the month. Say you only win 10 days. And trading's not like a job. You don't get little dollar raises. If you're consistent, those $100 wins will quickly turn to $500 wins. It just depends if you're consistent. And then you start scaling up fast. That's why people end up quitting their jobs and just becoming millionaires once they actually master the skill so quickly. Because it's a compound effect. You just start doing the same thing over and over and over and over again every single day. But instead of it like being like a job where you pretty much get paid the same, unless you make some substantial change, your substantial changes can happen the more consistent you are. So literally in 2 weeks, you could go from $150 wins average to $300 to $500 wins on average. And there's 20 trading days in the month. So the more consistent you are, the more you stick to your stop loss, the more you accept your baby losses and be like, okay, who cares? Who cares if I just lost a 60 ball? Because I'm gonna make 500 my next trade. And you keep that mindset, and this is why a lot of women traders actually end up being better than men because they don't have that ego problem and stuff like that. But once you accept your L and you actually are able to come back, because these setups are really, really easy. Next session, if you decide to continue, we're going to get into actually how to find them closely and how to find the key areas of resistance. But a lot of times it's just going to be very, very, very free. Like I told you, like it's going to be on the monthly, weekly, or the daily. That's all you're going to use. So all I do is go to the monthly, weekly, daily. See, okay, where is price shorting at over and over and over again? Okay, I see a resistance wick here, and I would top it down. But let's just say I was on my daily, because the daily just shows you everything in the smaller. So I see these two resistance wick here, right? Okay, and then I see one all the way down here. So I would use this one as my stop loss. Because remember, we're trying to make sure price is gonna. If I see heavy resistance in these three areas, especially a recent price again, and then we just broke above it, I'm like, all right, bet. We just broke above this strong resistance. Let's just draw a box here. Let's see if price wants to hold this area. Stop loss below that lowest resistance candle right here. Because if price doesn't bounce here, then I know it's going to clip lower. And you could honestly do this resistance wick here. You could play with your stop losses, make them as like big as you want. But a lot of the times you're going to be right, especially on longs. And cool, I would take something like this. Boom, expect it to bounce at either this one, or these two up here. And as you can see, went ahead and chose, boom, held, and we stayed long. And then shorting is just easy though. Shorting, you just have to know how to short, and we're gonna keep going into it. Also in the course as well too, I did update as well too. I definitely do recommend going in the short. I do have how to short and how to long and read the trend. But a lot of the time, shorting is just this easy. It's just up, resistance coming in contact with resistance. Let me just go ahead and take it down. And it's just going to be that easy a lot of the times with resistance. That's all you're looking at is for other resistance. And yeah. If you guys are looking for a cryptocurrency broker where you guys can trade crypto futures, altcoins, and meme coins, I recommend you guys head over to bitunix.com. You guys can either buy crypto straight up and buy your favorite coins using your card, such as Bitcoin, Ethereum, USDT, XRP, etc. You guys also have the ability to trade futures as well, where you guys can either long or short cryptos such as Bitcoin, or even trade altcoins and meme coins such as Gala USDT. So you guys have a huge variety of what you guys want to trade, and the fees are pretty low as well. On bitunix.com, they also do give you guys a welcome bonus as well, where you guys can complete some very easy steps and get some free capital which you guys can trade with. There's also tons of trading competitions that go on that you guys can earn some capital to trade from too, and you can compete against your buddies. So if you guys are looking for a new crypto broker with low fees, fast transactions, and fast withdrawals, I'd head over to bitunix.com. Link in description below. Peace.